the best stocks to talk about are the ones that nobody knows about yet, right? You're getting in early. But the most popular topics by definition are the ones that everyone is already talking about.
Hello there, and welcome to the Uncharted Invest podcast version. I am Andy Nelson. I'm the co-founder and editor of the Uncharted Invest Magazine, which comes out monthly. And joining me is my co-founder and co-editor, Brian Griffo.
Just a note, this is not investment advice legally. This is just for entertainment. Enjoy, guys. God, I've missed your voice. Welcome to the party.
Thanks. Turns out you can't do it from a browser. You have to be on the mobile app.
No. We're all figuring this one out. It's all good.
Great. So to lead things off, what will Tesla's price be Monday morning at 9:30 a.m.?
I'm guessing exactly the same price that it is right now.
Yep.
Great. And that is financial legal advice. All right.
Facts.
So let's just level set here. Alex is from ticker symbol U, YouTube channel, and we're happy to have him. Talk to him again. Last time was in Clubhouse. We're trying out Twitter Spaces now. Something new, seems a little bit more convenient, way to get more people in, listening, participating. And Andy, do you have any notes to head things off?
Obviously, we enjoyed our conversation a while back, and you've since gone on, and I think you've gone completely full-time with your channel, and it's definitely shown the amount of work that you've done and the amount of stuff that's been getting added, and we're loving it still. So thanks for all the work that you do, and we're excited to chat with you today.
Oh, sure. Thanks. It's my pleasure to be here.
Yeah. So the big one for us, a lot of our listeners and followers are Tesla fans, and we know that you are too. We thought the response from AI Day was sort of milquetoast and very underwhelming. We personally thought it was a big deal, and it seemed like you did too, based on the video that you had. What were your first impressions of it, and did it make you more excited about the company or not?
Yeah, sure. So, it's kind of a multi-part question, right? So AI Day was a recruitment event held by Tesla to get like some big AI nerds to join the company, right? So fundamentally different from having like a shareholder presentation or something we would expect from like a battery day, right?
Right.
So I think that context is important, and that's something that was lost on a lot of people. Just because, hey, it's a Tesla event. I like Elon Musk. There's going to be a robot. I'm excited, right? So I think that's what was largely responsible. That disconnect, even though it was like clearly stated by Tesla, was responsible for a lot of the lukewarm like reception. Like, hey, there's a lot of math here. There's a funny person dancing in a robot suit here, and like this isn't very easy to digest. So, I actually thought it was fantastic. My background is in signal processing and artificial intelligence, so I have a lot of previous work done in that space. So mixing camera and radar data together to like form a opinion about something that both of those sensors are seeing. And I thought they did an excellent job kind of conveying how the move from using radars to using cameras only is going, as well as their progress in the hardware department, both in terms of the FSD chip and in terms of Dojo and like that super amazing supercomputer architecture that they kind of laid out. And then, of course, the robot. So I'll pause there and see, like, is there some specific thing you want to talk about AI Day?
Yeah, I just had some of the same concerns. I was really a little bit sketchy about weather, having grown up in Buffalo, New York with snow and rain and all kinds of stuff. And I think AI Day made me more bullish that they're going to be able to solve that. And then also I found it was interesting, not only like basic obstacle avoidance, but having the imagination to remember where you last saw that vehicle or obstacle and then predict a path even if it is obscured. I think those were the two things that you were surprised about, that had trouble with, and I kind of shared in that. So I was excited to see that. And I think that that's something that you maybe hit on in one of your videos.
Yeah, so, right. So I think the argument that, just for everyone listening, the big argument I had before Tesla proved me wrong, so I want to be clear, this is an opinion I no longer hold, but the opinion I held was, hey, you need radar data to do two things. Really accurately estimate the range of what's going on, because, it's hard to pull depth information out of a photo, right? And two, if you're partially occluded, so like, there's fog, there's rain, there's lots of snow, or it's like pitch black nighttime, no lighting at all, right? I didn't think cameras could do a good enough job by themselves of sensing the world to do full self-driving. And then during AI Day, Tesla basically just said, hey, Alex, you're a bozo. Here's what we did to solve that problem. And they pulled lots and lots of data of all the specific instances I just mentioned. And then they just retrained the algorithm to work in those cases. For example, they pulled 10,000 clips of snow falling off the back of a truck, to say, hey, when the scene drastically changes because something is falling off of the back of the thing in front of you, here's, let's train on that so that you can perform in that case as well. And now everything is absolutely fine, right? So, that's what made me change my mind. And now I agree. I believe that there isn't a problem they cannot solve using cameras only.
I was just saying, from somebody who doesn't understand that stuff nearly as much as anybody else does. All we had seen up to that point of full self-driving was, oh, here's a couple of videos from a couple of people that got the beta, and this is the dashboard. Here we got to literally see under the hood how this thing actually works and what the cameras do. And to me, it was just eye-opening that, all right, I get it now. This is how this all works. Not the mathematical computations, but there's the stuff that they're doing and the ability to map roads with it. And just seeing that all in action, to me, says, oh, it's not just a software that's just going to show up. We get to see it, how it works. Whether or not I'm ever going to work at Tesla, which I clearly won't, it was awesome to see all that tech at full display. So I'm just saying kudos to them to sort of saying, this is what we're actually doing. Did you feel that way at all?
I did. I hope that they do another, quote unquote AI Day, whatever they want to call it, where it's almost the same presentations, but focused towards investors and passionate fans and Tesla owners and kind of more the broad general public, where instead of lots of math and science and artificial intelligence, it's more about hey, broad concepts you have two cameras in your head that we call eyes. They're bad at estimating depth if you close one, so we used radars to solve that problem. And then we dumped radars because we figured out that when you move your head a lot, you get a really good estimate of range, right? So it's that's the video equivalent of, being a person is, hey, if you just walk, you'll get a really fine estimate of range real fast because your brain knows what to do with how shapes change in the real world with the data you're getting from your eyes, right? And then using that to lead in to so, if you back out how the human brain works, which is how they started the whole presentation, here's a brain, here's the different parts of the brain, here's our code, here's the different parts of our code that are connected together kind of like the brain. And they kind of told that kind of story instead of being oh, we use this funky math equation and everything comes together with this and vector spaces and blah, blah, blah. I think the reception for that will be through the roof, kind of like Battery Day,
Yeah, it seems like with a company like Tesla, there's always something to get you reinvigorated or bullish every, quarter or almost every day with this news cycle. But I think when you were talking about pulling all those clips and edge cases for weather, we had always talked about how Tesla had this first mover advantage, but now we see it in real action. I mean, that's something that you're not going to get from Waymo operating in a 5-mile area in Chandler. Last I checked, I hadn't even seen it rain there once. So this is now the first mover advantage in plain sight, right? We're pulling these clips, and with the loop, we're teaching ourselves how to do better within this playground of roads and rules and regulations.
Yes, I totally agree with that. I think one of the massive things they have is not just a first mover advantage, but nobody else is in second place for this data, right? They're vision only, which allows them to do things like run a video game engine, and simulate data that they can't get from the fleet. No one else can do that as long as they're relying on LiDAR and radar data, because they would have to simulate that data as well, for example.
But yeah, I was reading an article this morning about the CEO of Sarcos, which is a robotics company that Palantir is invested in. And he was saying, he was very impressed by AI Day, but them doing robotics and thinking about it outside of driving in kind of a 360 world with every edge case is going to be a next hill to climb. So I guess as a Tesla investor, I think I'm excited about the robotics sense of it outside of the automobile, but I think that probably has a longer timeline, than maybe you'd like or want to see.
Yeah, so I have really mixed feelings about the robot. And again, I also had mixed feelings about them losing radar. So, I could totally be wrong about this one too. The robot, I think one of the implied statements there is, hey, we're using the hardware from FSD and the AI from FSD and the cameras from FSD in the head, right? And we are putting it in a human form factor. And that's because the same type of math that works for full self-driving is going to work for the robot as well. And like the pushback I feel there is, the implied statement is you're boiling the world down to the problem of don't crash, right? Which is the prime directive of the car, right? And doing things like everything becomes a navigation problem then. So I don't know if my worry or wonder is who is going to do all the other things, like teach the robot what a screwdriver is and how to operate it, which is very different from what FSD does, right? Which is don't crash. Here's what an obstacle is. This is a thing you don't want to hit, the end, right? And we're going to track all the things you don't want to hit. But now you're asking a robot to interact with stuff, right? Like imagine programming a robotic garbage man. He's got to get out of the garbage truck, figure out what a garbage can is, right? Understand how to interact with it, like empty it and put it back, then get back in the car, which, is like open a door that he just walked through the other side of. You know what I mean? Like a car door is really two car doors, right? It's the inside, when you're inside the car trying to get out, that's one interaction. And then from the outside, that door looks completely different and you interact with it completely differently. You're in a standing position, the actual handle is completely different than the one inside. You're in a different position when you're starting that interaction. So there's all these other things you're going to have to teach this robot to do that don't apply to the car. And it's like, is Tesla going to buy a Boston Dynamics and just be like, hey, we want all that IP now because we want it? Or are they going to build that team in-house? Or like, what is going on there is my fundamental question about the bot, I guess.
What's exciting is it seems like they've got something much bigger than driving. Obviously, when you have optical AI on that level, you could find a different lane. I've talked to Doc Ben about it being used in the medical field, but you could pick another sandbox as opposed to saying, here's a robot, do everything in the world all the time. Just kind of like jump a lane into a different field and make it like specifically for microsurgery or specifically for some other industry or use case. And so I think it would probably evolve more along the lines of an entire world and data set outside of driving, and then another, and then another. And maybe that's how it may progress, as opposed to trying to make a robot just suddenly do everything.
Yeah, I think it does. And I think what I think will connect those two things is Dojo, right? Like, here's the robot. We're not going to make it do anything. Here's the platform. And then we'll provide the power to train it, this Dojo Amazon Web Service-like thing. And then people will build apps for the robot on this platform, one of which will be microsurgery, another which will be, lawn care, another which will be garbage collection. And as people build these apps, Tesla will A, take a platform fee, but B, sort of figure out the code that kind of connects them all and build like a better developer toolkit, that gets sent back out, kind of like how Apple's App Store does, providing app developers with like, here's the app development kit, and they're refining that over time as more and more apps and services are built on top of that platform. So maybe Tesla doesn't do the programming at all. They do that like one level below programming, where it's like, here's how you mess with the actuators. Here's like basic object recognition for all use cases. Here's how you make the robot stand on two legs and move and walk. So you don't have to like figure out that part. You can start from a walking object recognizing robot and then build purpose-built, functionality into it.
I guess we have like base layer optical AI, and then let others who have use cases come to Tesla and try to harness, the direction that they've gone and, specify it to that industry. So that was like kind of my last question on that whole thing, was just if you had, we're always guessing, and it's so hard after 2 years or 5 years, but do you think, let's say like 2030, Tesla's making more money off cars, if that's column A, or everything else, if that's column B? In other words, robotics, AI, different industries, you can put solar in there. What would you think in terms of future revenue in technology? Is this going to be forgotten as a car company in 20 years?
In 20 years, I could see it, maybe not forgotten, but maybe auto represents like 33 to 40%, and everything else put together is like the other, 60-ish%. But I think they're going to be a titan in the auto industry for a long time, because I think after cars comes autonomous ride hailing, right? The robotaxi network. And that is such a massive like economic game changer that I don't think anyone's going to forget that. That's kind of like, that would be kind of like saying everyone's going to forget about Ford, when Ford has kind of helped define the traditional automotive industry for like a century, right? So it's like, yeah, Tesla could move on to way bigger and better things, AI training and all the cool stuff we're talking about with the bot, but I don't think it will be at the cost of their amazing robotaxi business. It'll be in addition to it, if that makes sense.
It does, yeah. I remember the debate, like, is Amazon a good bookstore? Are they going to be a profitable bookstore? Are they going to be able to have all
right.
the books? And then it's like, you fast forward, it's like, guys, screw the books. Like, they're hosting data for the U.S. government. It's a whole different story. And so I think it's interesting to see how these things progress. They start as one thing, and then they become something much, much bigger. But Andy, I know you're live with us, and sorry I kind of jumped on that. I was just excited.
No, I'm just as excited to sit and listen to this too, but I want to hit some of the other topics. I know we don't have you for a huge amount of time, Alex. So I want to zoom out a little bit and talk about ARK's holding of Tesla. I mean, because I guess there would be at their 10% maximum, and the breakdown of these numbers a hell of a lot more than I do. At what point do they add more? And I know they did not too long ago, but after you see something like this, you think their bullishness would even be higher and they would go all in. But it seems like they're adding other stuff and building positions in other companies that we've talked about as well. What are your thoughts on that?
Yeah, so I think you're spot on. So they have roughly 8% of all of their money in Tesla. The reason it's like 7.5 or 8% is because Tesla doesn't sit at the top of, for example, ARKG, their genomics fund, or ARKF, their fintech fund. But yeah, in every fund that it's in, it looks like it's close to, I'm just pulling out all my data here. It looks like it's roughly about 10% of the fund. And in truth, that can go up to like 11, 12, and sometimes even 13%, as we've seen in the past. But I do think that they're spotting good opportunities elsewhere. And it's not that Tesla is by any means a bad company or a bad stock in this case. But what I do think is their risk versus reward of being overexposed to Tesla. As Tesla climbs, that risk gets greater. So they're always looking at it like, well, given how much it's climbed already, how much do we expect it to climb over the next 5 years? And can we be deploying that capital elsewhere? And not just for climbing for the sake of like gains, but maybe there's this new idea in autonomy, right? Like an example would be a company called TuSimple, TU Simple, like the word simple, that just focuses on autonomous trucks, right? So it's directly competing with the idea of the Tesla Semi. So if they're gauging, hey, just based on the idea of autonomous semi-trucks, maybe we should spread around and get into TuSimple as well, so that we're not just locked into Tesla for this idea, right? Does that make sense?
Yes, and I think while we're talking about ARK and sort of like the dispersion of their funds, Brian and I talk a lot about, we track their daily movements every day. We both get the emails just as you do, and we know what they buy and sell. First of all, that to me is so different, and I guess the transparency and the information age of finding out what a fund is buying and selling is outstanding for us as investors to maybe use it as a guide or as a tool or as just learning about other companies. Whereas the other, it's a secret for everybody else, it seems, right? Do you think that more funds are going to adopt that strategy of kind of that full transparency, or do you see that as a thing that just ARK will do?
I think for a while, just ARK will do it. I think we'll see more and more people competing with that, not necessarily just because ARK does it and therefore like investors won't stomach anything else. I think the thing that sets it apart is like, as a result, lots and lots of people, certainly myself included, talk about ARK Invest picks. And so that's generating a lot of free publicity for ARK. And, they're turning around and also sharing their research, right? Which also not a lot of companies do openly, down to the raw numbers. Like, hey, here's our Monte Carlo model for our Tesla price target. Hey, here's how we're thinking about Bitcoin valuation as a function of its hash rate, and all these other like weird things that are usually said behind closed doors to justify just buying these assets, right? But because ARK shares it, YouTubers like me can make videos about it, which get seen by hundreds of thousands, if not millions of people. That is not happening for the BlackRocks and the, global X's of the world who are trying to compete, right? Like, where's the ticker symbol U for global X? Whose channel is that, right? And that's just because they don't do that,
Yeah. And then the other thing that we sort of as retail investors see, like we get excited when, we've been working on research for Palantir since October or November of last year. And then suddenly earlier in this year, Kathy starts adding a ton of it. And I mean, a ton, and you know how much it was. And we get excited like, oh, maybe we were right about something. It's not that we base whether we were right or wrong about something, but we get excited when we there's some sort of validation as a retail investor when you see something that was on your radar a while ago now start to get scooped up by her too, right? Do you have anything that you're looking at outside of those funds that you see get picked up and you're like, oh, cool, they like it too? Do you have that feeling ever?
I don't, not because so A, I think that's awesome. You're for sure right about Palantir. But B, my investing world tends to be ARK Invest picks. And that's because I think they're just better at spotting opportunities earlier than me. I haven't been in something only to have ARK get into it after me. Like, I haven't been that lucky yet. And that's just because I tend to either invest in the same sectors as ARK, so like, Palantir and AI and stuff like that, or sectors they won't touch. So for example, cannabis is something, I think will be a budding industry, no pun intended, in the next few years here. And ARK has made a conscious decision, it seems, to not touch that industry. So, there will be no overlap with my current holdings and their future holdings in that space, right?
Yeah, and just on that too, like what they add and don't, do you think that if they could hold Bitcoin straight up, they would get rid of the proxies like the Grayscale or the Coinbase, or do you think they would still be all over that? Because ever since I've started with them, which was probably like 5 years ago or longer, they've had Grayscale, they've had that interest there into cryptocurrency, Bitcoin, what have you. I know they've applied for a Bitcoin ETF. I'm not sure if that's futures or if that's actually holding spot. Do you have any color on that, what you would think that they would do if no restrictions or regulations were on the table in the market?
Yeah, I think they would hold a lot more straight up Bitcoin. That's right. They would expose everyone in ARKW and ARKF, which is their advanced internet fund and their fintech fund, respectively, into more Bitcoin directly. And I think they would also start exposing people to Ethereum. And I think they would still hold stocks like Coinbase, because Coinbase is a service built on top of crypto, right? Like, as opposed to being a cryptocurrency directly. But I agree, Coinbase right now is their third biggest position, full stop, right? They have almost $1.5 billion in it. I bet that would go way down as the exposure directly to Bitcoin and Ethereum would go up, right?
And then on all their funds too, it's interesting to see the ones that do carry over across different ETFs. You recently noted how Palantir was added into, I think, all of them, if I'm not mistaken.
Yep.
I tend to like to pick the winners out of the bunch. I always have, as opposed to holding the ETFs broadly. I guess just with that, the ones that appear in more funds, I feel more confident in. I guess that's a remark on total addressable market, but how do you feel about those particular names? And if you could remind us, besides Palantir and Tesla, what other names cross?
Yeah, so plenty of names cross. Like, so let's lay down some ground rules here. ARKK is their biggest fund. It's about like half their assets under management, so it's as big as all of the other funds combined. And ARKK, the special thing about it is there's nothing in ARKK that's not in at least one other fund, right? So when anyone makes the statement like, hey, something's in at least two ARK funds, you can't include ARKK in that because ARKK will only pick stocks from their other funds, right? So you should be looking at G, W, F, Q, and now X when you make that statement. And you're absolutely right. Palantir is in every single fund, all six of those funds, right? The other stock that's in all six is a company called UiPath, which is about enterprise process automation. So kind of like Palantir, but less focused on just, helping you build a digital twin and manipulating that digital twin and making insights, and more on the focus of, hey, every company has work that ends up just being like pure digital manual labor, right? Copying and pasting across spreadsheets, thinking about this document and then sending an email about it regularly, et cetera, et cetera. And UiPath helps businesses of all flavors, from genomics businesses to fintech businesses to robotics businesses, automate those processes. So that's their 10th biggest position. So 6 spots even above Palantir. And then I think the other multi-fund winners like that, there's a company called Unity Software, which I'm very, very bullish on. Unity is a visualization engine. They make a lot of video games, but they also make a lot of interactive ads. They make a lot of stuff that helps automotive designers do cross-collaboration design in AR and VR, and ultimately, as part of the metaverse. So Unity Software is their, I think, 5th or 6th biggest position, and it's in 3 funds besides ARK. And then Teladoc, which is their 2nd biggest position overall, is in ARKG, ARKW, and I think it's actually in ARKF as well. And Teladoc does telemedicine. And so because it's medicine, it's in ARKG. Because it's doing, value transfer over the internet, it's in ARKF. And because it's, or in ARKW, and because it's redefining how we think about medical risk, right? Like health insurance and like the numbers, crunching the numbers behind insurability and risk, it's in ARKF, is my take on Teladoc.
Yeah, that's good. We're both interested in Unity as well. I'm just wondering when they're actually going to project some of their technology into other industries like construction or other fields where that kind of mapping could be useful. And on that same point, like we talked about companies that are not in ARK funds, I don't believe Matterport is, but they have so many patents and seem to be so much into data and taking that analog world and digitizing it. It would be one of those stocks that I would see in ARK funds or not be surprised to see in ARK funds, something like that, or maybe even a Clean Spark. I know that.
Clean Spark. Yep.
You know that one. Andy and I were surprised not to see like Astra and Rocket Lab in the space fund, and neither of us kind of bid on that one. So those are kind of the names that we're seeing floating around that, we either are surprised that are not included or could potentially see in the future.
Yeah, so Matterport, I'm just looking at it for the first time here. That's definitely an interesting play. My guess is there's something about them that, like, a direct competitor to Matterport appears to be a company called Trimble, which is actually the top of, I believe it's ARKX. I might be wrong, but it's also big in ARKQ. And that's another digital twin type, company for industrials, taking a lot of this physical assets and data and digitizing it to form like a model of the enterprise that people can then use for like inventory projection and like, big asset management and figuring out like how to optimize where everything goes and where everything is and what everything does. So yeah, right. Matterport is a shoo-in for places like that. And then the question is, why would they put their next dollar in a Matterport instead of in a Trimble? And that's like where you would directly compete those two stocks or those two companies and identify their valuations and like what's going on and, that kind of stuff.
Yeah, I see. I didn't have that they had the kind of cross competitor there. And then something with like a Clean Spark that would be more of like a Bitcoin proxy, but it would also be like an energy play, something like that. So that wouldn't be super surprising, but these are smaller caps, so maybe they need to develop. I know that Matterport was a SPAC for a while until it flipped, so it might just be early days in these cases. But that's definitely interesting. Just on this whole disruption front, I was catching up on just the last video or two that you published, and Andy and I have both been pretty big fans of C Limited, and just got my brain going about the disruption of traditional finance and banking with some things that they're doing. But I mean, there's examples all over the place. You don't have to go very far. You can pick Square. You can look at, smart contracts or any kind of decentralized finance and things. But how do you see the flip side of the coin of, banks? Do you think they're going to sink or swim with this whole crypto revolution? Is it something that you think they're going to just get involved with, or do you think that they're going to be phased out like maybe a legacy automaker that doesn't switch to EVs might?
I think it's going to be kind of both, and it's really up to people, right? So banks are traditionally pretty conservative financial institutions, and that's not like really a fault of the banks. That's just like part of their business model, right? Like finance institutions tend to really not want to lose money, and they make really safe plays with lots of money to just generate lots of actual dollars, right? So even a low amount percentage gain on billions and billions and billions of dollars is actually net a lot of money, right? So I think what will happen is consumers, retail investors like me and you, are going to push for the adoption of Bitcoin. And when big banks don't do that, and a Square does do that because they can take the risk, because they don't have all this physical infrastructure like big bank branches in the best parts of town, and all these ATM machines and all these little kiosks everywhere in malls. They're going to have to make a choice. They're going to have to say, hey, we're either going to not compete with Square and have Square eat our lunch, or we're going to have to spin off a financial service that also does these things and use like our huge financial network to offer the same products that people want in the finance space, right? Like offer points back on a credit card in Bitcoin instead of in cash, offer smooth, frictionless ways to buy Bitcoin and store it instead of cash in a savings account, right? Like, staking a crypto instead of essentially staking cash in a high yield savings account, right? The banks that choose not to do that, I think, will get phased out as the world moves to crypto, as that crypto, what the Bitcoin and crypto infrastructure essentially is the financial backbone of the internet that didn't get developed alongside the internet in the 70s, 80s, and 90s, because nobody imagined that the internet would include commerce, right? It was about information exchange, not value exchange at the time. So if you can imagine how bad it would be for you as a financial institution to not incorporate the digital financial infrastructure of the future into your business, as the internet begins to include this financial layer, which is the blockchain, right? Like, or the blockchains, however you want to like subdivide that category. So I think the ones that don't will die over time, and the ones that do will just become the still legacy institutions, but now they're still in the game because they have a crypto offering alongside their disruptors,
And again, I want to keep the topics going, so I want to switch away from that and talk about something that I think you like, and that's gaming. And we hit on it a little bit. We hit on it a little bit in Unity, and I know you've done some stuff with skills too. As a gamer, I think the console world that we grew up with is obviously about to disappear, and everything seems like it will be internet based, and mobile gaming is going to be huge. And now with VR and AR, I think there's just a lot of different players that are going to emerge in this. And what do you see as the future of gaming?
Yeah. So first of all, I don't want anyone to think I'm in a rush. Like I don't have a hard stop at 5. So like I'm happy to hang if it goes a little late, just in case that was like changing your agenda. But let me answer your direct question. I think the future of gaming is going to be increasingly mobile, and that mobile includes AR and VR. Like I grew up playing PC games and console games, and the things those have in common is you're pretty stationary when you play them, right? You're at a PC or you're at an Xbox, you're in a room, the TV is fixed, the monitor is fixed. And that's like, the best games take place on the most powerful machines. But as those machines get more powerful and smaller, they can become mobile, right? Like now, cell phone gaming has blown up in no short part because cell phones are incredibly powerful computers today. And now Oculus doesn't need to be tied to a computer. The Oculus Quest is a fully self-contained machine that's a VR headset that is its own computer. It doesn't get plugged into anything, fully self-contained. Snapchat is coming out with AR glasses called the Snapchat Specs, or maybe they're called the Spectacles, which is, right now for AR content, right, like context enhancement into the physical world. But you can imagine Pokemon Go working on the specs in the future, and now you have this mobile computer on your face, and you're catching Pokemon alongside whatever real world tasks you're doing, hopefully not including driving your car, right? So I think the future of gaming is mobile. And then from there, the question is, is it going to be 2D gaming or is it going to be AR and fully VR gaming? And my answer is it will eventually all be the metaverse, which is, fully VR, multiple worlds that you just switch lobbies between. Your workplace is just a VR workplace, and then you just move into the VR bowling alley to play the VR bowling with your friends instead of going to a physical bowling alley. And then we will be able to do everything from anywhere.
Yeah, and as that metaverse, and becomes more important in our world, it does bring up a use case for NFTs. They were laughed off for a lot of different pieces of artwork and things like that. But as gaming grows, and you can imagine, ideas where you have rare items or just things that are so important in this virtual world, having that blockchain signature of ownership and being able to resell that as a game gets more or less popular just does seem like a legitimate market for NFTs and for that specific blockchain use case. And I think we maybe talked about that a little bit off air, but is that something that you'd been thinking about?
Yeah, I think that's one of many, right? Like rare items, that's a perfect example. Another example, like you said, was artwork. Another example you can imagine, I own the first Tesla Model X, blah, 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 right? Like, as an example. And with it comes an NFT that proves that I have that car, right? So it's like, you can imagine vehicles with independent serial numbers or like, rare anythings. I have the first printed Charizard card ever, right? A Pokemon card. And it comes with a little digital signature that says like, the owner of this card is actually the person who holds this NFT, right? And just like you said, another case for that is games. People who like rare items that take long, long, long times to get. Many popular games feature that mechanic. And the proof of that item being yours would be an NFT, and that makes it unhackable, right? Somebody steals your account, they can't access anything because like, hey, I hold my NFTs in cold storage. You can't get them without me letting you. So yeah, I totally agree. There's a million use cases for NFTs, and people laughing about it today, just like they laughed about the internet in the 90s and the early 2000s. They were like, that's dumb. Nobody's going to want the internet. And here we are, right?
Yeah, I think there's another thing that's happening as well with how gaming and like the VR headsets and like there was a delineation between people who were gamers and people who were something else, right? And I think that with the technology at work and people are going to start being in AR and VR and doing, traditional productivity things in those things, which in a way kind of like blurs the line between gamers and not gamers. I'm saying because they're using the tech that would have been so foreign or maybe laughable to them before. Do you see that coming?
I do. I think that's part of a larger cultural shift. And I think that's important to remember is that innovation requires adoption, and adoption requires the understanding of like just the culture that's like adopting it, right? Like people want Teslas because they want to reduce their carbon footprint. That's a cultural shift, right? People are blurring the lines between gamer and non-gamer because now being a nerd is cool, right? Elon Musk, huge nerd, and he's super cool, right? He's the guy who lands rockets backwards and comes out with the Tesla Roadster. Jeff Bezos, huge nerd, super cool, right? Like, so I think being nerdy has become pretty cool, right? Like software rules the world, AI rules the world. These are inherently like nerdy industries. And as a result, things that were associated with nerds, Dungeons and Dragons, video games, right? Like, fancy computers or whatever, they stopped being these relics of things that made you a nerd, a social outcast, a pariah. And they started becoming very mainstream because guess what? The best businesses in the world are built on these kick-ass computers, these kick-ass pieces of technology, and they're run by people who played Dragon Quest and played all, Dungeons and Dragons and all these things that are now appearing in pop culture that used to be relegated to like the basement, right?
Yes, perhaps the geek shall inherit the earth.
Yeah.
I guess I kind of want to switch gears a little bit, and I'm not trying to rush you out the door. I want to give a chance for people to ask you some questions besides us, so that's what I'm trying to get to. But what I really want to do is switch gears and just talk about you and the things that you're interested in, the things that you're excited about when it comes to investing, or when you get excited to make your next video. What drives you? What gets you up and makes you want to What are you excited about?
Yeah, so I think I'm excited. That's a great question. I appreciate you asking it. I'm really excited about two things. Like, I'm excited about the positive changes that technology brings to the future. YouTube has this bad feedback loop of negativity sells, right? There's lots of fire on thumbnails and bad news, and people are going to sell this and the crash is coming. So I really like seeing the good things that real companies are bringing to people, and kind of using that as saying like, hey, let's look at that and see if this company is worth investing in. And then finding like sleeper trends within those based on advanced technology. So like one example, I recently did a video about the SPACs that Palantir has invested in. I covered 12 of them. I'm sure there's like 13 or 14 total. But one of them was a company that builds prescription digital pharmaceuticals. So apps that the FDA must approve to help treat people for PTSD or triggers associated with, substance abuse and things like that, right? So it's going to be a business that has software-like margins at medicinal-like prices, right? Because it's a digital healthcare app, right? So prescription digital pharmaceuticals is something I only found because I was doing this deep dive into Palantir and realized they invested in this company. And that spawned a whole bunch of future ideas, right? For example, exposure therapies that, require you to put on a VR headset and confront your fears, with a therapist logged in to like monitor you and make sure you're okay, right? So it's like if you have arachnophobia, you put on this thing, you get exposed to one little spider, and they slowly ramp up that experience until you overcome your fear in a safe virtual setting, right? That's going to be a business of the future that zero people are talking about. And I'm excited to make that video because it's going to make lives better and make the right investors a lot of money. Does that make sense?
Yeah, that's awesome.
Yeah, it does. This is all cool stuff. Thanks for doing this kind of rapid fire because I know we've had a lot just burning questions and stuff. I'm not sure how much you follow like the macroeconomic world. I've talked to a few people in this space, and I guess the thing that I was having trouble reconciling for a while was how Cathie Wood kind of, leads the charge on tech being deflationary, whether it's through Moore's Law or Wright's Law, but being able to kind of do more with less because of technology improvements. Unfortunately, even to the point of putting people out of jobs, but causing cheaper products. But then on the other side of the coin, you have this inflationary world with Fed monetary policy, money printing, et cetera. And so I was having trouble looking at that and having, Ark and Cathie being bullish on Bitcoin because I was looking at it as mostly an inflation hedge. But I guess where I get to with Ark and Cathie being fans of it is that it acts on both sides of the coin, meaning that it is a defensive play in terms of money printing and being a hard money store of value, a treasury, whatnot. But also, crypto as a technology would kind of lend itself to being deflationary tech. Have you thought about that on the macro scale of being on both sides?
For crypto specifically, or for like just Ark's stance on technological deflation in general?
Yeah, crypto specifically, but then I guess the pivot is, Ark embracing it because it does go against, one of their biggest themes, which is like this technological disruption, which is, by nature deflationary.
So I think, for for Bitcoin specifically, let's say, I think the idea there is it has a lot of room to run because of its fixed supply and the projection of its increased demand, right? So like, it is a hedge against inflation, but also it's a, asset with a fixed supply that lots of big financial institutions and companies might want to include on their balance sheet to diversify away from the dollar or, whatever their corporate balance sheet holds aside from Bitcoin. For all the reasons you just mentioned, everything from money printing to like, the dollar being a, asset that gets worse and worse over time. To, there's lots of reasons to diversify away from the dollar for everyone, not just giant corporations. But on the flip side, it is based on this technology that's going to also power other things. In the case of Ethereum, we talked about NFTs and like all the cool dApps, the distributed apps or, decentralized apps, I guess, that will be built on top of it and holding the asset that they're all built on, the network that they're all built on, is it's a long position on that technology. So you are killing a lot of birds with that one stone. You do get kind of the best of both worlds, like you were saying. And then zooming out away from the Bitcoin and towards like these disruptive innovations, I think both sides of the fence can be right, which I know is a weird statement. So like, let me briefly explain it. I think COVID, the pandemic, is going to drive prices up in the near future. I think when Disney opens back up, tickets are going to be more expensive than they were before it closed because the demand is going to be there and the highest bidder is going to win those tickets, right? I think once that demand, that pent-up demand is satiated, right? Enough people get to Disney, enough people go back to the movies, the restaurants stop being so packed, people like get it out of their system, prices will go down as demand drops, and they will keep going down as technical innovations that got adopted during the pandemic make things more efficient, right? As restaurants become more automated, they can lower the cost of their awesome meals compared to their neighbors that didn't do that. And, they'll keep making a profit at a lower price and drive out their non-innovative competitors out of business, right? So that's an example of deflation taking over and causing a win for the companies that adopted innovation and a huge loss for the companies that did not invest in themselves, instead investing in, the exact opposite, right? Paying their executives bigger bonuses, share buybacks to increase the price of their shares and like all that kind of stuff. So does that make sense?
Yeah, it absolutely does.
Yeah, that's cool. We wanted to ask you about your channel too. We took the long road doing long form writing, but I think today people just want to watch videos and stuff like that, which is fine because we're working on more multimedia stuff. But how have you experienced? I know that you recently hit a big big milestone. I don't know if you want to talk about the channel because you came in at an interesting time. I think ARK funds pivoted down a little bit cyclically, and that was right when you committed kind of all of your time. But I think in the long run, it's such a great investment because if you've got, any fund managing $50 billion, I think there's, a pretty good TAM being the go-to covering it. Like, have you talked to a lot of people, ARK? Are they watching your channel or any experiences about it? Can you just talk about what's going on over there?
Sure. So, I've been fortunate enough to talk to a few people from ARK. They've reached out, and one of them even did an interview with me. So that's Simon Barnett, who's one of the genomics analysts there, and he's incredibly talented. And I've had the fortune of talking to him several times now. I think ARK does watch me passively, not just because I cover ARK, but because they have a big footprint in social media, including YouTube. They run their own great YouTube channel, and so I'm sure they keep a pulse on what other, quote unquote influencers are saying about their funds and their strategies and, their recent pivot into and out of China, right? Back and forth and back and forth. So I think they do keep a pulse on that. I think one of the big advantages that I've really pressed into is instead of keeping my mouth shut as the market sort of turned down away from growth and into value and cyclicals, I kind of doubled down and said, look, these guys, ARK investors identified all of these great stocks and they're trading at a discount. They're not down, they're discounted more towards the future, right? And then Kathy Wood came out with a video that basically said all that on Bloomberg. She was like, hey, I bought these companies thinking they were going to double over the next 2 years, right? Over the next 5 years, double over the next 5 years. And then they crashed like 40%. So now I think they're going to triple over the next 5 years, right? Like that doesn't change my thesis. Like I did that research when they were at the top. You know what I mean? So it's like, I agree.
Better entries.
Yeah. So there's a fundamental, I think the point I'm leading up towards is for me, and I'm sure for you as like a multimedia brand, what you'll notice is there's a big disconnect between things that are exciting to talk about and things that make a lot of money, because the best stocks to talk about are the ones that nobody knows about yet, right? You're getting in early. But the most popular topics by definition are the ones that everyone is already talking about. Right? Oh, Palantir this and Tesla that. It's like, yeah, but everyone knows about those companies. When I talk about Pinterest and it doesn't get views, I don't worry about it because Pinterest is that tells me that people are not thinking about Pinterest and they're not willing to think about Pinterest. So I have a long time to be able to average into that position before it eventually pops, and it will pop because I read their earnings report and it was great. and they fell because of like something that was completely unavoidable and not their problem, right? Exactly what we already talked about with Bitcoin, which is, hey, pandemic's kind of over for a little bit. People are going outside, which means they're spending less time on Pinterest, right? Like that's happening across the board. It's happening in Netflix and Peloton and all these other great companies. Like we're just like re-baselining our expectations for their increase in average users based on the fact that it's sunny out. You know what I mean? And restaurants are open again. So it's like Pinterest isn't going to fail because the sun is out, right? Like,
yeah, it's sometimes bad earnings is great news for long investors. I was listening to the CleanSpark call, and they spent a lot of money on Antminer machines, and that'll probably come to fruition in later quarters. So it's funny, you see a sell off there, but you're buying that, so this buy the news, sell the news, and all this stuff. You just have to kind of know what you're investing in and kind of know what your time horizon is.
What are you excited for as far as the future of your channel? Do you have anything coming up that you want to tell us about, or do you have any things you're excited about, companies you're going to dive into? Because that's been a pivot that you've made where you've gone directly into companies, and I think that's been some really awesome content.
Sure, yeah, I'll spill the beans a little bit. So you're right. I switched to deep dives when the market took a tank because I thought that would be the place to add the most value. Is like, hey, these are the companies that crash the most, that ARK Invest is buying the most. So if you want to follow them, like, let's switch to deep dives. As the market continues to rally, which, hopefully it will continue to do, I'm going to switch back to this macro portfolio view, talking about technology and trends to keep people like engaged in the bull thesis of the future and to help back out like overall trends, right? As opposed to individual companies. When I hit 100,000 subscribers, which is, in the next 3-4 months here or whatever, I'm going to open a $100,000 portfolio. And I'm going to start putting my money directly where my mouth is publicly and show people a disciplined approach to investing in high tech, high volatility, growth oriented stocks, right? And follow along, have people be able to follow along that strategy and understand the type of skills and discipline it takes for those stocks specifically. So like, I think one thing that trips investors up, and I'll be brief because I know you want to open questions, is we have this problem of mixing and matching a lot of companies into one portfolio that really represents several different strategies, and then not knowing what to do when we have winners in one area versus winners in another area, and we tend to buy high and sell low as a result and underperform our assets. So one of the unique things about my channel is I only focus on high-tech growth stocks that I understand, right? A very, very niche, and ARK Invest shares that niche. I share that niche with ARK. ARK definitely led me into that niche, not the other way around. So I will be developing a investment strategy directly on that niche, and people will be able to follow along and be like, oh, okay, this is the decision that's getting made to buy more Tesla. This is how we're assessing DraftKings versus Skills versus Unity, right? 3 very different types of gaming, quote unquote, companies, et cetera, right? So people will be able to see my dollars, my allocations, my sectors, the technology platforms I believe the most in, why I avoided certain stocks that ARK has, et cetera. So that's coming down the pipe soon.
That sounds exciting.
Yeah, that's cool you're doing that. We were actually talking about doing a fantasy finance league where we do like a 10-round snake draft with like ARK funds, or, pick different stocks and try to compete with ETFs. I think that would be cool. Like you see like video gaming, or not, online gaming or online gambling getting more popular. That would be... Fantasy finance would be a whole new sector to do, to compete daily, quarterly, annually, or even like leaps. We'll do a leaps league, which would be like a lot of ARK stocks and stuff like that.
Yeah, I know there's a company called Stock Battles that does something like that already, like it's fantasy stocks. So
yeah, there's a few I looked at this morning, but I don't know how developed any of them are, but that should become more popular in time. Jackson, our friend that does specifically Palantir Vision, Palantir Daily, he had the opportunity to talk to management there at the top, and that was cool because I got to kind of get a few questions in of my own through him as a proxy on earnings day. And I just see like these worlds are kind of colliding access wise in a way. It's not uncommon for different content creators now to actually be able to talk to the, companies that they're covering. And likewise, like I'll pick up a book and read it, and then I'll be doing a podcast with an author like we did with Jeff Booth, last month, or even talking to you right now, man. We've loved your channel since day one, regardless of how many subs you've had or what the hell's going on. Just love the content. And now we're talking to you. So I think it's just interesting to see like the walls being broken down in the world right now, or kind of like good ideas can kind of win and connect with each other.
I agree completely. I think the information sharing economy is really just getting started. Like it's cool that you're able to tap into directly the companies that you care about most. Like you said, Palantir's executive team, right, is sharing information with Palantir Vision. Like that's pretty incredible. ARC's analysts are coming on my channel and just saying like, hey, here's what we're excited about. Here's the things within each space that we're engaged in and researching and thinking about, and like the innovations we're excited about disrupting some sector that makes something very crappy to do, right? The healthcare industry being the specific example. And I think we're going to keep seeing more of that. I think one thing that a lot of people don't realize is hedge funds have teams and teams of researchers behind closed doors figuring out how to allocate their money, like to optimize returns, right? We as retail investors don't really have that until now. Like there are a lot of really good channels out there that are really helping piece together that story in a way that used to be only at like exclusive dinner parties for the rich, hedge fund manager offices, like in big buildings in New York City, and now that information is being distributed everywhere. And it turns out that the crowd, right, retail investors, are really good at digesting that information and putting the pieces together and sharing, because they have no incentive to keep it behind closed doors for themselves, right?
Yeah, and as retail becomes more and more popular, I think that's going to be great. People love to be interacting with the companies that they support. And, you don't need to look any further than Elon Musk. I mean, he's on there on Twitter connecting with normal, Joe and Janes. And, that's just something that seems to be increasing, which is fun. It makes it a lot more interesting than, whatever it was. Like it seemed like it was like an inaccessible, market maybe 20, 30 years ago. And now it's all kind of accessible. I'm just curious. I know that you would take like ARC's funds and think like, okay, their conviction is exactly their weightings. But do you think it's different, like if you had like a private conversation with Kathy, like, hey, you could only keep 5 stocks and you can't look at them for 10 years. Like, do you think that would be the top 5 weight? I mean, we'd probably think Tesla would be in there. But what do you think? Do you think it would be like perfect, like 1, 2, 3, 4, 5 in terms of their weightings? What do you think they would hold? Like gun to head kind of thing? Like they only get to pick 5 and hold them for 10 years and not look.
That's a great question. I think it would be pretty close to the top 5 they have now. And I think, that answer becomes pretty fluid because their valuations change and all this kind of stuff. But yeah, if I had to guess blindly, Kathy Wood's top 5, buy these stocks, don't worry about them. My guess they would be Tesla, Teladoc, some crypto heavy company, whether it's Coinbase or Square, which is going to unlock that crypto economy and bring it like more mainstream. A company like, Palantir or UiPath, which, is a cross industry, cross everything, kind of company. And then, there's probably room for one, thing that we could never guess in there, whether it's a Spotify or Shopify, or whether it's more like a Zoom or a Zillow, right? Like I'm not going to guess, but Shopify is number 5, so maybe it's going to be Shopify.
Yeah, that sounds about right. That'd be about my guess as well. Yeah, that's cool. This has been fun. I got some of this recorded, and actually we're on Apple now too. We got finally on all the different platforms, so we can release stuff all over. If you're cool with that, just so we can get some audio out there, Alex, that'd be great.
Sure.
Yeah, it's fun to do it this way because you can record the podcast, but also, open it up to a community and kind of have the best of both worlds. Maybe more people get it on the other side, but it's nice to have it opened up as you're making it.
Sure, man. Yeah, no, I love it.
Nice. All right. Well, thank you again so much. I hope to talk to you very soon. I'm sure we will. And if we don't do the fantasy ETF draft this year, maybe next year.
Sure. That sounds great.
All right. Well, thanks so much for everything you do and for taking the time today. We really appreciate it. We look forward to everything else that you're going to do. So stay safe out there.
Sure, you too. Looking forward to catching up again soon.
Nice.
All right.
Thanks,
Thanks, Alex.
All right, see ya.
I'm Andy Nelson. You can find me on Twitter at AndyNelson76, and he's Brian Griffo.
At Brian Griffo on Twitter, the Tesla Wolf. Our website is unchartedinvest.com.
And don't forget, this is not investment advice. This is just for entertainment purposes only.